Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. As we get ready for Wednesday's market, here's a thought to keep in mind. In trading, preparation is what turns uncertainty into opportunity. That's exactly what we are doing here, preparing smartly before the market opens so we are not caught off guard when volatility kicks in. In this video, I'll break down the important levels, highlight the key zones you should watch out for, and share possible trade setups that can help you plan your day better. If you find these daily insights helpful, make sure you hit that like button, share this with your trading partners, and subscribe to the channel so you never miss the next day's trade plan. And don't forget to drop your views in the comments. And since tomorrow it's Wednesday, let's remember midweek is not for slowing down, it's for staying consistent because consistency is what builds trading success. On that note, we'll jump straight to the charts. Today again was a no trading day for me. Again, as you can see, the market was entirely sideways. Markets did open with a good enough gap up, did not sustain, immediately came back, took a support from around the level that we had marked as a resistance. Of course, it will turn into support for the reason of the theory of polarity, where in a resistance once broken, it turns into a support. And that is the reason you can see exactly the zone that we had marked as a resistance. In case if market would have approached it from here, it would have turned into resistance. But since market opened with a gap up, this level acted as a support, and we could see some buying happening around here. But as you can see, I focus a lot on the market structure, and the market structure around here was extremely confusing. There was no conclusive trade which could have been taken. Today, in fact, was a very good day for option sellers. The entire day of sideways action led to a very good decay in the most out of the money premiums, and they would have made some decent gains. There were some volatility, as in some major drops, and immediately market rebounded, and everything which was there that were seen multiple times in the day. But then that is something which can be attributed to the expiry day volatility. And as a market structure trader, as a price action trader, there was nothing very clear. I had also drawn this particular trend line, the breakout above which with a pullback or something, I wanted to go long. But then again, seeing this kind of volatility where in markets, after remaining sideways for some time, kind of broke down here like a double top kind of a pattern, but then immediately rebounded, reaching for a new highs. And then again, you can see the number of wicks which are there, no clear price action. It is always better suggested to stay out of such markets. So, yeah, that was the reason I did not participate in any option buying trades today. The second account that I have, which I have also mentioned in some of the earlier videos, where I am experimenting with an intraday option selling strategy, which is quite simple to follow. And that is something which I was actually avoiding on expiry days, because once you are very near to the expiry, like on the day of the expiry, the premiums of out of money options are not that great. And once the premiums are not that great, it makes the risk reward to not be lucrative enough. But since I am experimenting and I'm experimenting with small quantities, that is why I decided to go ahead with the trade today as well. And the trade went very good. Not even one minute adjustment was needed in the trade once it was live. It went on smoothly, decaying completely, and the premiums eventually out of money option premium both on the call and the put side, which were sold, uh, that became zero. So again, no trade in the option buying side, but then the strategy that I am testing, I will be making a video on that pretty soon. So stay tuned. And that is a passive income strategy. So somebody who is into a working professional and is not able to look at the charts so much would also be able to make use of it. The only downside, yes, you need a bigger capital. Even with margin reduction hedges and margin reduction legs that you add to the strategy, you need a good enough capital to make a decent gain out of it, right? But then the plus side, I always like to look at the positive things in life. The plus side is just because of the capital that is employed is huge, and the quantity or multiplier that tends to be low. And it's a non-directional strategy. Markets are most of the time sideways, and just because of uh, the capital that you're doing, your position sizing is automatically in control, right? You cannot play with a very huge quantity. in case if your capital size is not very big. And even if your capital size is very, very big, of course, the stop loss that you have, be it 1%, be it 2% of, will come as a cap of portion or a percentage of the entire bigger capital that you have, right? So that's it. So that is something wherein position sizing and risk management is taken care of in itself. And it's a pretty simple strategy. I will be sharing it with all of you pretty soon. So stay tuned. Make sure to subscribe to the channel if you haven't already. And on that note, we'll start the planning for tomorrow's video. Sorry, tomorrow's market. I have had a crazy hectic day today. Right, we don't need this level anymore. Nah. I'll also be deleting this particular trend line. Not much of an importance. Again, like I am telling you guys, right now I am expecting markets to remain volatile till the time period we are in the range of, in this particular big range that we are in. Up there is a weekly fib resistance. On the downside, there's a gap area which will act as a support. This low, of course, is important for us. Today, again, the market is a doji. We have the closing very, very close to where we opened, and that is why we are experiencing volatility. Again, the market is uncertain where it wants to go. One positive thing is I came back late from the office today. That is why I'm recording the video, and the cash option data, cash data for the markets is out. And after a long time, I'm surprised to see FIIs being net buyers today. So let's see how it turns out to be for tomorrow. But then again, for tomorrow, I will ask you guys to keep it again very, very simple. Till the time period we are within this particular range, keep your trading activities very, very low. Trade with lower quantities. So this will be the plan of action number one. We open flat. The best case scenario will be we open flat to a minor gap up above these levels with a pullback. We can look for a long entry. We can also see a trend line coming in like this. Yeah. And from this low till today's high, the levels are almost the same. We will, sorry, again, I am just fine-tuning and adjusting the levels. Almost the same, right? The high was slightly breached, yesterday's high, but still will be fine-tuning because we are planning. And what's the use of planning in case we are don't. And below this particular swing low, we can also look for a short trade, but that is something wherein we have to be careful, and we will, because there's a immediate support area around here wherein we can look for a buying opportunity. So say for example, we open flat and then we break down below this and we take a short trade. So around these levels is the place where we need to be careful, and we need to look at getting out of the short trades immediately if we see some strong buying emerging from these levels, or in case if we open with a gap down and then we are forming a base around here, and then based on the price action, any positive price action, we can look at creating a long trade above this. And of course, below these levels is what we will be looking for a short trade. Now, I'll keep my trading activity very, very simple. Now, tomorrow can be a good day to trade because we were extremely sideways today, and we can expect some momentum tomorrow. So whether the market gives us that momentum or not, that is something which we will be uh, planning tomorrow based on how the price action is performing. But as of now, this looks like the very, very simple. The good thing today is that after the gap up, we sustained. Not like everything that we have been seeing in the past, wherein all gap ups were being sold into and we were actually closing near the lows. For a change, surprisingly, we have actually closed near the highs. We also see FIIs at net buyers in the cash market today after a long time. So all the gap ups that you see here, markets opened with a gap up, closed, did give us a good fall, then closed near the midway. Around here, markets opened with a gap up, closed near the day's low. But that is something today the gap up actually did kind of sustain, and we have closed near the high. So that is something which is positive. Let's not go with any biases, is what I would suggest now. We'll clearly look at only and only intraday price action and quick scalping trades, right? Do not hold on to your trades for a longer period of time now. Be very, very quick with your entries and be very, very quick with your exits. So yeah, that's it for the trade plan for Wednesday's market. Remember, the market will test your patience, discipline, and focus, but it's how you respond that makes all the difference. If you found this video useful, don't forget to like it, share it with your trading circle, and subscribe to Your Nifty Guy for daily trade plans. Also, drop your thoughts in the comments. And I'll leave you with this thought: consistency beats intensity in trading and in life. Stay consistent and see the results will follow. See you tomorrow with another plan. Until then, trade safe and trade smart. Cheers. Thank you so much, guys.